Living in Southern California, we have a lot of natural disasters like earthquakes, mudslides, wildfires, flash floods, and it's really challenging to protect you and your assets from all of these natural disasters. So today I'm going to chat with an insurance agent named Mark Newman-Kuzel. He's a really good insurance agent from farmers that will explain what is happening with the insurance companies here in the state of California, why insurance premiums are so high, what you need to do to protect yourself, earthquake insurance, fire insurance, all of these things that are going to be really important to protect you and your assets if you live here in Southern California. And as always, my name is Felipecrook with eXp Realty. If you are thinking about buying or selling a home here in the Southern California region, please make sure you like and follow for more up-to-date information about the real estate market. Mark, I am so excited to chat with you about insurance because there's a lot of questions that my clients have. But first, I wanted to ask you if you could tell me a little bit about you and your agency.
Sure. Hey, great to see you, Philippe.
Yeah.
My name is Mark Newman-Kuzel. For those who don't know me, with the Mark Newman-Kuzel Agency, I've been an insurance advisor in California for 10 years. I'm a native Californian, born in San Diego, and I've grown up in Orange County and have had my career up and down the coast for the past many years, many years. And I am proud to say I'm an award-winning referral-only agency, and my colleagues and I are here to keep California protected, safe, and secure. I love what I do. I'm an animal rights advocate.
Yay.
I'm a city boy. When I'm not in LA, I'm in Paris. And when I'm in neither nor, I love lake life, boating, and just hanging out. And I'm a huge Taylor Swift fan.
I'm a Taylor Swift fan as well as so many other people are. So, yay, Swifties. Here's the thing I want to ask you, and I was really excited to chat with you today. What is going on in the insurance industry in California? It feels like something is crazy is happening. So, I want to hear directly from you what is happening.
Yeah, good question. I'm asked that question by hundreds of my clients every week in, week out. And yes, it's insulting how much insurance premiums have gone up. But as I remind my clients, you're fortunate to have insurance and you're not being canceled. We're raising premiums, but we're not canceling you. And we're not canceling you like many of our competitors over at State Farm, Allstate, Travelers, many others have fled the market. My agency falls under the auspices of Farmers Insurance, the oldest and largest insurance company here in California, and HQ'd right here in Los Angeles. So we're here. We're not running for the hills like some of the competitors. Now, the reason why competitors have run for the hills are many factors. The insurance industry suffered $100 billion in losses last year due to natural disasters. That's one of the reasons why premiums are going up. Insurance companies want to raise premiums so they'll have enough money in the bank. God forbid there's another disaster, they have the funds to pay. Insurance, as you all know, is a pool. We pay in, and if there's a disaster, the insurance company pays out. So because some of those previous names I mentioned to you were not successful with the Department of Insurance in the state of California in increasing premium so that they would remain profitable for those disaster case scenarios, they said, well, forget it. We're no longer doing business here. The
I mean, that's a
other
huge amount of business that is leaving the state because of natural disasters. So it feels like there's fewer and fewer options for buyers looking to insure their home.
Yes and no. If you're a seasoned professional such as myself and our team, we're able to find coverages in or outside of farmers. Farmers will always get the first right of refusal because we have a vast umbrella that will insure single-family detached homes. However, many other companies decided to flee, and I wanted to touch again on the large premiums. So it takes more money these days to rebuild homes, the estimated reconstruction cost. So labor charges, labor shortages, supply chain issues, the cost of supply chain materials. So you take all those costs coupled with the $100 billion in disasters from natural disasters over the past year, those are the main reasons why premiums have gone up. And there are limited selections. There are selections, though, if you have a good insurance advisor advising you. There are many options out there, but many of them are also fly-by-night, little nickel and dime type of companies you can find at Costco or Walmart. We're not like that.
Yeah, I was wondering about that in terms of having a good insurance advisor. Like, what do you do when you're first talking to a prospective client that wants to get insurance? Like, what is your process to help them get the best insurance that they can get?
Well, it's manyfold. I'll try to go into it as without the weeds,
Sure.
going into the weeds. Especially for you first-time homeowners. You're wondering, well, my goodness, why are premiums going up? Well, I just explained that in a previous comment. So what we look at is we look at the dynamics of your home, and we have a valuation system behind the scenes that we use, and that determines what the rebuild cost is going to be. For instance, how many square feet, the quality grade, is it average, above average, premium, custom? Are the floors marble, custom marble, hardwood, carpet, ceramic tile? Are there moldings? What are the permanent structure fixtures in that home? You plug all that in and the system will generate what the estimated reconstruction cost should be. Often it's not enough money. And with our expertise, we know spot on what we should insure a home for. To give you all an idea, if you take a typical Spanish home over in Atwater Village, for instance, we're going to take that 360 valuation, which is the behind the scenes system. We're going to plug in all the dynamics and we're going to see what the number is. You want to have at least $450 per square foot for a home in Atwater Village. If you have a home up in Bev Hills, Bel Air, Malibu, the hills of Los Feliz, above the boulevard, below the observatory, you're looking at something at least $500-600 a square foot, bare bones minimum, closer to $700 to $1,000 a square foot. So you take all that information, that's going to determine what the rebuild cost is. Now there's another thing called contents or personal property. What those are is those are everything inside the home, not permanently attached to the ceiling, the floors, the walls. So if you use the scenario of taking your home, turning it upside down and shaking it, all the contents that fall out are your personal property. Going back to Atwater Village, for instance, a typical home is about 1,000-1,200 square feet. Unless you're a pack rat and a hoarder, $100,000 should be sufficient with regard to your personal property coverages. So that's what you look at. And then there are two other terms called loss of use and liability. Those are the important ones. Loss of use means if you do not have a cash offer, you have a mortgage on the property. So the mortgage provider wants their monthly payment from you, regardless if the house was destroyed by fire, earthquake, or something else. So loss of use provides you with offsite cost of living expenses. So you have money to pay for a condo, apartment, home, what have you, for up to 2 years. So you're not paying a mortgage and offsite cost of living. And then of course, liability is exactly what it sounds like. If someone's on your property, invited or otherwise, they trip and fall, then you want to have a minimum of $300,000 of liability to protect yourself.
So I have seen a lot of clients actually that have been burned in the past from insurance because something wasn't covered on their insurance policy. Is there something that clients should look for in a policy to make sure that something is covered versus something that is not covered?
Well, in our particular instance, Philippe, what we do is we talk to the client and we go over all the coverages I just went over with you. Prior to pumping out a quote, we take the dynamics of the home directly from the realtor who referred us to the client and or the client, him or herself. So we plug that all in. I ask several questions. Then we talk about the contents and I ask them, well, if your house burnt down yesterday, how much would it cost for you to live in a similar living situation on a monthly basis? So they're providing us with those figures. There have been times, not very often, when people want to cheap out and say, well, I don't want to insure my home for $450 a square foot. I know it could be rebuilt by $300, $350 a square foot. In those particular instances, I will politely disagree with them and remind them that I'm the insurance expert and this is why we need to do it. We try not to make any mistakes with regard to the coverages because at the end of the day, even if they said, well, we wanted 350, my reputation is on the line. And we never want to have a complaint filed against us with the Department of Insurance, insurance commissioner, and tap into our errors and omissions or a malpractice policy that doctors and lawyers have. So we try not to make those mistakes, and we answer questions as thoroughly as possible. And then what we do at least once a year is have an annual policy review, because so many things have changed. As we all know, things have changed since last year versus this year. So we want to make sure that we have enough money to insure the home, and things haven't changed in the course of the past year.
So, Mark, we are having wildfires right now. About a month ago, we had a earthquake. Can you talk to me a little bit more about the benefits and the drawbacks of getting additional insurance like earthquake insurance? I know that a lot of clients, I checked up on a lot of clients and they were nervous about the earthquake. In fact, I just had a buyer close in El Sereno, which was 3 blocks away from the epicenter of that last earthquake. So earthquake is definitely on the mind of a lot of people. What should they do in terms of earthquake insurance? Is it worth it? Is it not worth it? What are your thoughts about that?
I would say that probably 70% of my clients have earthquake insurance.
Oh,
You definitely want earthquake insurance. This is why it's vital when you're meeting with your insurance advisor to insure your home as tightly as possible from the get-go, because an earthquake policy is going to mirror your home policy. So if we're insuring your home at $1 million, then your earthquake policy is going to mirror that home policy and come in at $1 million. Now, there are situations where you can have some discounts. If the home is bolted to the foundation, we'll provide you with a document that you can have certified by a licensed engineer to confirm the home is bolted. That will give you some discounts. For those of you who are an all-cash offer, we encourage you to have as low a deductible as possible, because deductibles can be incredibly high on earthquake policies. They're generally 15%. So you take
15%?
15% of $1 million, and that's a lot of money. Yeah. But would you
So
rather be paying 15% of $1 million to rebuild a home for a couple $1,000 a year? Or do you want to have to come out of pocket $1 million to rebuild that home? Because again, the lender is going to want their money. It's not their fault you did not have earthquake insurance to protect their investment that you're basically renting from the mortgage provider.
So if you have a house and you have insurance on it, but you don't have earthquake insurance, we have a huge earthquake and it ruins the foundation, then the foundation wouldn't be covered under the normal insurance because it was earthquake related?
That is absolutely correct.
Wow. So I mean, I don't think people understand that. So I think that right there is super important. So anything that is a result of damage from an earthquake, your homeowner's insurance will not cover.
That is correct.
Wow.
Now, there are extenuating circumstances, and it's kind of like the fast-talking narrator at the end of a commercial or the small, tiny print in an advertisement. We always like to remind our clients that all things are contingent on claims investigation. Now, let's say there was an earthquake and the earthquake broke the gas line. The gas line explodes and the house is engulfed in flames. Is it your fire policy or is it the earthquake? Chances are the claims team are going to say, well, look, Mr. Smith, you did not have earthquake insurance, which caused the gas line to erupt. So we're going to deny the claim. Sometimes the claims team are a little friendlier and they will try to work with you, but the law is the law. If you
So
don't have earthquake insurance, people, you're basically screwed.
that is surprising to me. Like I thought that at least some of it would be covered under regular insurance. So if it's
Yeah.
damaged from an earthquake, what about now you said a separate fire policy. So you have to have regular insurance, fire and earthquake insurance, or is the fire and the insurance regular insurance together?
Good question, Philippe. And it really depends on where you live. So let's say, for sake of this conversation, everyone, that Philippe lived in Los Feliz, north of the boulevard under the observatory, and I live between Franklin and Los Feliz Boulevard, below the boulevard. We have the same exact everything in our home. Well, the fire line score of Philippe's home closer to the observatory is most likely going to be a 0, 2, 3, or higher. In those particular instances, your normal home, hazard, fire, those are all three terms that insurance companies are referred to: a hazard policy, a homeowner's policy, a fire policy. Generally, but not always, they're the same thing. But if there's a fire line score of higher than a 0, 2, for instance, Farmers Insurance will take the risk, but you have to have a companion California Fair Plan policy for all fire and wind. I wanted to get back to your question really quick on why premiums are so high. And as everyone knows, California has really been on fire since June. So these fires are causing mass evacuations, properties have been lost, people are being relocated. These things are going to affect all of you over the course of the next year or two with regard to higher premiums. And from what we're being told, we haven't seen the worst yet. It's going to continue to be this way now through the end of 2024. State Farm is coming back or threatening to come back into the market, but they are going to dramatically raise premium. So getting back to the fire policy specifically, if you have a home and a high fire line score, you will need a difference in conditions policy, a DIC, which primarily protects you against water and liability. So now you're going to need a fair plan policy. Now there's also the earthquake policy on top of that, but sticking to the tune of fire. There are other providers out there who are willing to take the coverages all in. Those are considered non-admitted carriers surplus line. So if Farmers denies the risk, then agents can go outside to other options once approved by Farmers, which is what we do from time to time. And these surplus line non-admitted carriers, which a lot of people are afraid of because they don't fall under the auspices of the Department of Insurance, state of California. So the insurance division is not guaranteeing that the premium, the claim would be paid. It's kind of like putting your money in the bank and it's FDIC approved versus non-approved. However, there are very, very many companies out there that are surplus line non-admitted carriers that are incredibly financially solid.
So
I'd
when,
want to,
and obviously you would advise on which companies are the best ones for those type of policies.
well, yeah, we don't work with any fly-by-night cheapy policy providers. We only work with solids. Yeah, because
So
it's our neck on the line.
yeah,
And I take what I do personally. So each and every member of our personal client family are part of our family, our personal client family. So I received calls when I was at a concert over the weekend from one of my clients and in a panic because she lives in Running Springs and she had to evacuate.
oh.
So we're there to help people morning, noon, and night.
So going back to the fire thing, because this is happening a lot with my clients that I've been working with over the last few years. So I had a client in Beverly Hills. I had a client in Highland Park, Mount Washington. There was parts of El Sereno, like in the hills, Monterey Park, Los Feliz. All of them were in a high fire risk area. And so that's the type of situation where you would have to get a supplemental fire policy in order to cover yourself for fire issues.
That is correct. So you would have a farmer's difference in conditions and a California Fair Plan policy. Or if Farmers denies the risk, we could go outside to a surplus line non-admitted carrier who often, but not always, will take the risk all in, avoiding the California Fair Plan. I would like to touch upon the California Fair Plan for a while because many, many people have heard of them. They bill themselves, rightfully so, as the insurer of last resort. Now, the California Fair Plan at one time was financially solid, more solid than any one insurance company unto themselves, because every company that's licensed in California, State Farm, Allstate, Farmers, Travelers, many, many others, all feed into the pool of the California Fair Plan. So they were solid. So the Fair Plan could never go under. But with the influx of insurers fleeing the market, there's not as many putting money into the financial pool. To give you a blunt example, the California Fair Plan has approximately $280 million in the bank. They
That's
have
it.
they have $320 billion in insurable assets. You do the math. The California Fair Plan is not going to have enough money to pay for disasters. I used to be a huge fan of the Fair Plan when I'd stand in front of groups of realtors and others about the financial strength and solvency of the Fair Plan, but that's changed. So people do not cheap out and try to protect yourselves with the California Fair Plan because you will regret it.
So because that is one option if you're in a high fire zone, then you can go with the California Fair Plan Act. Is that right?
California Fair Plan.
So you can go if you're in a high fire zone, you can go with the California Fair Plan, but they don't have the funds in case of a huge natural disaster, like a huge wildfire that we're seeing even in Orange County right now. Um, they wouldn't be able to cover all of the assets that they're insured. So
I can't say for absolutely positively sure they wouldn't, but I mean, you do the math,
it's
$200
risky.
billion in the bank, 320 billion in insurable assets. Well, 280 million goes pretty fast based on the average home price of homes here in Los Angeles.
Wow, that is pretty surprising. I didn't realize that. It makes sense though if so many insurance companies are leaving the state and they're not contributing to that fund, then they're going to have less money to work with.
I would like to, if you wouldn't mind for a moment, remind everybody, one of the other reasons to blame are you Californians yourselves, because when you went to the ballot box and voted yes on Proposition 103 to lower insurance costs, you shot yourselves in the foot. Because of that vote, insurance companies have fled the market. We have to remember that we live in a capitalistic society. So we're in business as insurance companies to make money. I don't necessarily advocate all of the principles on what they do to make money, but we are not working for a nonprofit here.
Right, of course. I mean, that is probably some of the cause of a lot of our issues in our society right now. But um, when you need insurance, you can't get it. So you always have to plan for the worst. And this is just part of how you live here in California. You have to plan for natural disasters, wildfires, earthquakes, it's and landslides, even like all the stuff that's happening in Ranchos Palos Verdes is like all of the landslides there. It just is insane to me that we're experiencing all this all at the same time.
I would like to touch on the landslides in Palos Verdes for a moment, Philippe.
Sure.
And those landslides are not an insurable peril. So unfortunately, those poor people whose homes are sliding down the hillside are not insured against mudslides, landslides.
Wait,
When you
wait. You're
they're not,
saying is that another supplemental
there is no
insurance thing?
coverages for such. Unfortunately, these people, it's sad. It's what's happening here. It's not insured against. I
Okay.
will give you a case for an example. Back in Oxnard a few years ago, if we all recall, there were the massive mudslides that buried homes in some neighborhoods.
Mhm.
Well, the result of those mudslides were because we had a lot of fires in the fire season, and then it was followed by an incredibly wet winter. So the chaparral and all the sagebrush and everything else that would normally protect the earth from all the rain was burnt away. So it was scorched earth. So the rain pounded directly down onto the scorched earth, moving the land, causing it to slide. So the Department of Insurance commissioner stepped in and told the insurance companies, you have to pay. That was an exception.
But I mean, that is something I had no idea about. So if you buy a home on a hillside construction, which is probably more expensive for insurance to begin with, but if you're on hillside construction and there's a landslide, your normal insurance will not cover that.
That is correct.
That
Flood
is
insurance.
that's crazy to me.
It's okay. So, and then everyone, when you're driving on Sunset Boulevard and you look up and you see all the homes in Sunset Plaza, for instance, many of them are on stilts. Most
Right.
often, homes on stilts are uninsurable. So these people are self-insuring. Self-insuring is a nice way of saying you hopefully have enough money in the bank or good credit to get a loan to pay for your home to be rebuilt. There are some surplus line carriers out there, again, non-admitted carriers that will insure those homes on stilts. Most admitted carriers will not.
I would, to me personally, I mean, I've never sold a home on a stilt. I would happy to sell one if someone wants to buy one. But to me, they seem really nervous and really suspect because you're in earthquake zone on a hillside on these little tiny steel piers that could snap in 2 seconds. I don't know. For me, they make me nervous.
Well, let's talk about that for a minute. For those of you who live in apartments or condos and there's under building parking,
Mhm.
if the parking in the structure is supported by the stilts, the columns, as Philippe just mentioned, those apartment buildings are most prone to earthquake damage or destruction. And for those of you who are listening who are renters, yes, you still need earthquake insurance because it's not the landlord's responsibility if an apartment building collapses and you lose everything because of earthquake. Unless you, Mr. Renter, Ms. Renter, have earthquake insurance, you're SOL.
And that's the same thing with earthquake insurance versus renter's insurance. Says renter's insurance does not cover damage from earthquakes. Is that correct? Or is that all in one umbrella?
No, renter's insurance is closer to condo coverages, which is like HO6, walls in, whereas the HOA is walls out. Now, the difference between a renter's and condo policy is manyfold. Primarily, a renter's policy is protecting your belongings, your contents, and it gives you liability. So let's say people had a debate watch party and they had friends over and something happened. There was a kitchen fire and everyone had to evacuate and it torched the place. Well, you lost all your personal property. If you had a renter's policy, it would pay for that personal property and your offsite cost of living expenses in another rental.
But that doesn't include earthquake insurance, or it does?
Earthquake would be entirely separate.
Okay, so even if you're a renter, you have to have renter's insurance and a separate earthquake insurance policy if you were even renting.
If you want to be solidly insured.
Right.
Now, most landlords require that renters have a renter's policy and that the landlord is named as an additional named insured on the policy. They don't require earthquake insurance, but it is you, Mr. Renter's responsibility to protect yourself.
And I assume that the earthquake insurance varies depending on the property, the square footage, all of that. Same with the homeowner's insurance policy, right?
Absolutely. Now, I wanted to touch on another fact that you brought up, Philippe, with regard to, oh my gosh, all these coverages and how do I know what I need? So for all the realtors listening to this talk today with the changes with NARA, as you know, one of the line items in the contract now is proof of insurance or the insurability of a property, and you can pull out of your offer if the home is uninsurable. So I've been saying this for 10 years and I work with some of the best realtors in California. So what they smartly do is as soon as their client's going to make an offer on a home, before the offer is made, they reach out to me so I can run the numbers to see, number one, if the home is insurable, and number two, what's it going to cost? And number three, do I also need a fire policy above and beyond? Because a lot of the realtors I deal with are for the higher net worth individuals in the multi-million-dollar homes.
That makes a lot of sense, especially when you're writing an offer on a property. You don't know how much it's going to cost for insurance, and even if it's insurable. So you're saying, when you get an accepted offer, call you immediately or during the offer process, call you to see some numbers before we even get into contract?
Absolutely.
Okay, that's great to know.
And then for those of you realtors who are seller agents only, please reach out to me as well, because what we do is we run the numbers on the property that you're listing. So when you have an open house, next to the sign-up sheet is a proposal for the insurance coverages of that specific property. So your potential buyers know ahead of time, oh, okay, well, this insurance advisor is promising that we can insure the home at X amount of money, and it is insurable. So it's a win-win because all of you who are listening today who are realtors, we want to close those deals because this market today is a lot harder than it was a year ago. So anything and everything we can do together to make sure that we find the insurance coverages for your clients is what we're going to do as a team.
So this has been super helpful and really, I learned a lot actually. So thank you very much for coming. If somebody wants to get a hold of you to get insurance, to get a quote, How would they get a hold of you, and what's the best way to contact you?
Yeah, there's a few different ways. I'm on Instagram at MNKuzel, MNKUZEL. Always helpful information there. You can phone us at 323-660-0076. You can email me at mark@the marknewman-kuzel-agency.com. And you can also check out our website, themnkagency.com.
Perfect. So what I'll do is I'll put all of those links down in the comments down below. And if you guys are looking to purchase or sell a home here in the Los Angeles area, I'd be more than happy to help you out. Mark, thank you so much for taking your time to chat with me today. And it's really, really helpful information. So thank you very much.
Absolutely, my pleasure. We're here to keep Californians protected, safe, and secure.
Well, you're doing a good job. So thank you.
My pleasure.